My name is Frank Siegel. I am the chairman of the business law and co-chair of the Cannabis Business Advisory Group, along with Scott Moskal, my partner, at Burns & Levinson. We're here today with our friends at Vicente Sederberg and my other partner, Katrina Skinner. And we're going to be talking about hemp and CBD, particularly SBA programs, lending issues, and new regulatory issues that are affecting the hemp CBD industry. So we've a lot to cover in an hour. The purpose of these seminars, obviously, webinars, are to keep us all connected under these very trying times. If anyone or their families are suffering with COVID directly, our thoughts and prayers are with you. But as we all say, we're united and we're going to get through this. But while we're getting through this, we want to be connected and keeping you updated on developments in the industry. What I'm going to do is just give a quick overview, because people have been asking about what's the latest in Massachusetts, being the only state where the governor did not list recreational cannabis retail stores as, I don't need this slide, by the way, you can take that off, as non-essential. And basically there's a very concerted effort to lobby the governor to change his position. He's very recalcitrant and has dug in his heels, giving various excuses as to why recreational pot cannabis should not be deemed an essential service. Particularly, was initially focused on additional traffic coming in from other states and trying to keep the COVID virus to a minimum with respect to outside influences. The response by the industry has been, well, Governor, that's a very easy fix. We just require Massachusetts licenses. And then it was, well, I'm not sure that's enforceable under the law. And we have responded as an industry that it is enforceable under various statutes that would enable him to restrict it. And there are restrictions today in many states, including Massachusetts, that residents can buy more product than non-residents. Unfortunately, he has not changed his position. What you're seeing is a fallout already in the industry. This could have a dramatic effect on setting back the industry in Massachusetts and everything that it's economy. You're seeing issues with this compound has opened new stores and they're being severely financially hampered. But the larger operators as well are also saying that it just doesn't make sense to operate even medical in this environment. And what this actually could lead to is a serious shortage of medical supply in the industry. So people continue to lobby the governor's office. Legislators are trying to do so as well. It's very likely that a lawsuit could be filed next week if the governor doesn't change his stance on this. Vicente and Burns & Levinson are working collaboratively like we do on many initiatives with Vicente Sederberg Strategies Group as well to try to get the governor to change his stance. But right now it continues to be a very big uphill battle. So there is upheaval in Massachusetts in the industry. There's going to be a lot of fallout if this doesn't change, and it will create a new landscape. So we continue to push forward. I think there'll be some changes in this by next week, in the sense that if there is no change with the governor, I do expect that a lawsuit probably will be filed. So with that, that's an update on Massachusetts. I think what I will do is now turn this over to one of my colleagues, Max Riffin and Scott Moskal. I don't know, Scott, who's a co-chair of the Cannabis Group with me. And we're going to talk about an overview with respect to various lending programs that are affecting the industry. And as many of you know, the stimulus package does not apply to cannabis and most of the ancillary businesses, but it does apply to hemp. and Max is going to walk us through that.
Yeah, thanks so much, Frank. I'm going to put on the slides now. So good afternoon, everyone. As Frank said, my name is Max Riffin. I'm an attorney in Burns and Levinson's Cannabis Business Advisory Group. Many of our clients, as I'm sure many of you are, have been asking about Small Business Association's new loan programs in response to the COVID-19 global pandemic. The SBA is offering funding relief under 2 loan programs, in particular that I'll focus on here. There's the Paycheck Protection Program, and then there's the Economic Injury Disaster Loan Program. It's kind of a mouthful, so I'll probably refer to them as something like the Paycheck Program and then the Disaster Program, something like that. I'm sure my firm isn't alone in expecting that there will be a huge influx of SBA loan applications for both programs. While we can't forecast actual numbers, it really seems unlikely that every qualifying applicant will be able to obtain relief under these programs. It's kind of just simple math. By the way, it's first come, first served. The collective wisdom is that applicants will have better luck applying with a bank or credit union where they already have an existing credit line or where they're already an existing client. So basically, to the extent any applicant has a pre-existing relationship with a bank or a credit union, I'd recommend that they explore those things first, go down that avenue along with applying. And I realize that may be difficult for many hemp and CBD companies because they only became legal at the end of 2018. So the first question that I'm hearing is, am I eligible? Well, at a high level, both programs, the Paycheck Program and the Economic Disaster Program, are both available to small businesses. Small businesses, as you may already know, they're typically those businesses with up to 500 employees. They're nonprofits, they're veterans organizations, they're sole proprietorships, they're independent contractors, and they're people who are self-employed. Well, unfortunately, these programs aren't available to cannabis companies, as Frank mentioned. They are available for hemp producers and manufacturers. So prior to this historic pandemic, back in 2018, which now feels like probably over a century ago, the SBA had reaffirmed that marijuana-related businesses, which include plant touching, as well as some non-plant touching businesses, they're ineligible to receive SBA loans. But more recently, last month in March, the SBA reiterated that cannabis companies aren't eligible for disaster relief loans because cannabis remains illegal under federal law. However, the SBA further clarified in a tweet last month that hemp businesses are in fact eligible for SBA funded services. So if a business is eligible, the next question I'm getting is, how can funds from these programs actually be used? Well, under the Paycheck Program, loan proceeds can be used for things like payroll costs, healthcare benefits, rent, utilities, and for interest on mortgage and other debt obligations. Well, what about using loan proceeds under the Economic Injury Disaster Loan Program? The uses under the Disaster Loan Program, these are slightly broader. Funds can be used for payroll costs, for increased material costs, for rent, for mortgage payments, or for repaying obligations that can't be met on account of revenue losses. So let's focus in more particularly on the Paycheck Protection Program. The Paycheck Program, it's an emergency lending facility. It was enacted to provide almost $350 billion in federally guaranteed and forgivable loans on favorable terms to qualified small businesses. And they had been in operation prior to February 15th, 2020. Companies are able to borrow up to 2.5 times their average monthly payroll expenses during the previous year, and up to $10 million total. The principal and interest payments and any fees are deferred for up to a year, but at least 6 months. The interest rates, well, they're capped at 4% under the Paycheck Program. Also, the SBA won't collect any yearly or guarantee fees, and it waives all prepayment penalties. Well, what about loan forgiveness? So borrowers are eligible for loan forgiveness for 8 weeks of payments for things like payroll costs and certain covered rent payments, utility payments, or mortgage interest payments. But, and this is the big caveat, to get full forgiveness, at least 75% of the forgiven amount needs to be used for payroll purposes. Moving on to the primary disaster loan program terms. The disaster program offers up to $2 million for each loan, with interest rates slightly lower than the Paycheck Program. So small business interest rates are 3.75%, and rates for nonprofits are 2.75%. The disaster program loans can be repaid over a max of 30 months, and borrowers can receive a $10,000 emergency advance within 3 days after applying for an EIDL loan. Even if the application is denied, the applicant isn't required to repay that $10,000 advance. So what about personal guarantees? Disaster loans that are less than $200,000, well, they can be approved without a personal guarantee. Unlike the paycheck program, loans over $200K may require a personal guarantee. So can I get both loans? Well, as long as the proceeds aren't used for overlapping purposes, small businesses can obtain both a disaster loan and a paycheck program loan. If a borrower received an economic disaster loan after January 31st of 2020, the borrower can refinance that outstanding amount as part of a loan under the Paycheck Protection Program. All right, so to recap, what are the key differences between these programs? Loans under the disaster programs can be used for broader purposes than under the paycheck program. Only the paycheck program has the forgiveness concept. Loan forgiveness, it's not available under the economic disaster program. Economic disaster program loans, they're repayable over 30 years, and they have a slightly lower max interest rate. While the unforgiven portion of a loan under the paycheck program, that's repayable over 10 years. Anyway, this is just a high-level outline of some of the key takeaways for these two important SBA loan programs, with a lot of questions remaining unanswered. So best of luck out there and stay healthy.
All right, thank you, Max. We're going to turn it over to Sean Hauser at Vicente, who focuses a lot on the hemp and CBD regulatory issues confronting the industry. And she's going to give us an update on recent developments and her take on the industry and how it's doing right now.
Thank you. So I'm going to give just a brief overview of kind of the update on the state of the industry, starting with USDA. And what we're seeing is a lot of states looking to continue operating under the 2014 Farm Bill provisions, hoping to get an extension longer than the current expiration date, October 31st, just in light of the additional economic hardship in light of COVID. And right now we have 20 states at least, including Colorado, Oregon, Kentucky, many of the major mature markets that have elected to operate under the 2014 Farm Bill for the 2020 growing season. And I think can we put up the slides? There you go. So, yeah, and it seems possible. A number of states through NASDA have put forward a request for an extension to operate under the authority of the 2014 Farm Bill past the 2020 growing season. And Sonny Perdue, the Secretary of the Department of Agriculture, stated in a Senate ag hearing last month that they'll do everything they can to address the needs of the states who are electing to operate under the 2014 Farm Bill provisions, including get an extension if they can, but that extension would require a change in statute likely, and that's going to be difficult. But most states are simply citing the shutdown in legislative sessions and the delays arising out of this crisis that are going to prohibit them from doing what they need to do legally to update their programs to conform with the 2018 Farm Bill standards, and also the additional economic hardships that will be imposed upon farmers as they have to transition to this new program with stringent rules and significant DEA involvement. Sorry, let me just proceed my slide here. So like I said, a majority of states are operating under the 2014 Farm Bill. The USDA is, in the meantime, continuing to approve plans. We have 14 states and 16 tribes with approved plans, and a host of other states with plans under submission or resubmission. Only one state so far, New Hampshire, has elected to operate under the federal program. And sorry guys, I'm just having a little bit of trouble losing my slides. Okay. And as far as hemp businesses staying in operation, in light of federal and state emergency orders, the federal and state governments have deemed hemp production critical infrastructure as part of food and manufacturing. And although retail sales that are outside of grocery stores and other critical business have in some states been forced to shut down, all those states are taking different approaches, and in some states like Texas, local governments are taking different approaches. So for operators, it's important to look at not just the federal and state orders, but also any local orders in determining whether you can stay open, and then also being sure you comply with any and all distancing and other health requirements pursuant to the order if you do choose to stay open. But manufacturers and producers should be assured that they can continue operating, and the USDA is working to provide as much support as possible to ag businesses, including working on the H-2A visa program and other initiatives to make sure programs have workers. As far as the states go, there's just a couple of states that recently got USDA approval in the past month: Washington, Wyoming, Montana, Georgia, Iowa, and Pennsylvania. Texas and Georgia began issuing hemp production licenses, and South Dakota finally passed a hemp legalization law, while Alaska legalized the transport and sale of CBD products and other hemp products that are endorsed by the state. The FDA, as many of you know, finally issued its progress report to Congress that it was directed to produce through the 2020 spending bill. The progress report was really an overview of the FDA's status as far as evaluating potential regulatory pathways for CBD and food, dietary supplements, and other products. The progress report did not put forward any formal enforcement policy, although it indicated progress towards a risk-based enforcement policy. But it did contain some notable statements and initiatives by FDA. Notably, the FDA is going to be expanding its research and data collection in order to get the information it needs to make an informed regulatory approach. And that will include ensuring there is a process to protect proprietary information submitted by businesses who elect to submit data. It will mean further coordination with federal and state regulators and authorities, and it will mean initiating additional research and studies through their partnerships. They've also specifically requested information, on the certain factors they're considering and assessing legality, including things like cumulative exposure, impact on vulnerable populations, and the characteristics of full and broad spectrum extract products, in considering whether those products are potentially regulated differently than CBD products. Meaning products that are marketed as CBD or containing significant levels of CBD. And the FDA, did confirm it's continuing its enforcement practice that we've all been familiar with, where it's basically focusing its limited resources on products that are marketed with claims of therapeutic benefits, unlawful health claims, or other false statements, including inaccurate information as far as THC content, or or other inaccurate labels, products that contain contaminants, including products that contain very high levels of THC, and products marketed towards vulnerable populations. The FDA has taken a number of steps in light of the COVID-19 crisis to manage its limited resources and focus on the emergency. It's effectively really seizing inspections and other enforcement activity that are non-emergency related, and will focus its enforcement on emergency issues. It does have a number of important resources on its website, and I think businesses need to operate as if FDA will inspect them and continue their compliance and best practices, but know that FDA's enforcement is going to be more limited than it was before. I do think folks can expect that in addition to the long time people were expecting that FDA would take to move forward with any risk-based enforcement policy or any formal change in regulation, this time could be further delayed. So I think that delays in FDA's progress are probably one consequence of this crisis, and there is important information in the March report as to some basic steps people can take to move towards compliance and safety and understand what the FDA is looking at. And I would encourage any business who has relevant data to submit that to FDA. And we can certainly help make sure any proprietary information is protected. And that wraps up the FDA update here. There are some good resources on their website as far as COVID-related changes in operation, and they did assure folks that the virus is not passed through food and food packaging, and I know that's a relief to many. And I will turn it over to my colleagues for the lending considerations.
Hey everybody, this is Scott Moskal. Am I on the screen or? Okay, well, I'll just speak. I'm not sure if I'm visual or not, but that's okay. Sean, you're still on the screen. Can you hear me? Can you go up or down? All right. So thank you, everybody. And I apologize for technical difficulties on my end, per usual, I suppose. What I want to do today, take a little time and just talk about what lenders may be looking at when they're considering you for a loan. And this is with respect to a hemp /CBD company. And this is not just with respect to the SBA disaster loans or the CARES Act. Under those programs, the underwriting process is a little bit more streamlined. But why I want to talk about this is because lenders are actually still looking at the hemp industry as a possible source of borrowers and to make loans. So Frank and myself, this week, we both have done banking and lending work for 25 plus years, and one of our clients, a national regulated bank, called us. Their particular group were considering making loans to two different types of hemp companies. And so I bring this up because this is exciting because the hemp industry, just like the cannabis industry, obviously has sort of always had difficulties obtaining financing. And certainly the fact that we have a regulated national bank looking at this, and I know there are other banks across the country too, should provide a little optimism to our community. Additionally, besides the regulated banks, there are lots of non-regulated lenders out there, or commercial finance companies, I think it's better to call them. And they are actively contemplating, many are actively contemplating making loans to the industry as well. I bring this up because, as my colleague Max said earlier, while there is an enormous amount of money being put into these disaster relief loans, there's only so much that there is. And they're not necessarily there to use for like expansion purposes. But to the extent that anyone wants that, there are opportunities. And what I want to talk about today is what some of these lenders will be looking at with respect to underwriting. And after my little section, Katrina Skinner will talk about what these lenders and banks may want in terms of due diligence, and especially KYC. So as folks may remember, if you were listening last week, I was with Lehman Brothers Bank, unfortunately at the last recession, but at that time I was in-house counsel, but had the ability and was involved in the underwriting. So I bring that perspective here in a sense to help, well, for any lenders who are watching, here's some helpful tips, but more importantly for the companies themselves that may be looking for financing. These are things that you all should be considering when you're actively pursuing some type of loan, financing, or debt. I think one thing that's really important is that the industry will need to educate many of these lenders, many of these bankers. Step one is to explain to them that even though hemp itself is a form of cannabis, we're not talking about marijuana, we're talking about industrial hemp, and that it is legal pursuant to 2018 Farm Bill. And you're also going to need to explain to your lender, what exactly are you doing? I mean, they'll understand farming, but if you say you have a handler's license, for instance, or you're making distillate or isolate or whatnot, you really may need to make that explanation and basically teach your lenders along the way. Things that they'll be looking at, and actually, let me take a step back for a second. With respect to CBD retailers, so B2C or business to consumer, I think there's still going to remain a significant amount of hesitancy in the industry, in the finance industry, to make loans to this group of part of the hemp industry. And that's partially because of as Sean was talking about just now, the FDA still has not come up with a full set of guidance as to, making a CBD infused drink or whatnot. And so this dovetails into sort of one of the initial underwriting questions that the banker will have is, what type of regulatory risk there will be with making a loan to a hemp company. So, on the CBD side, there's always the questions of, will the FDA issue a cease and desist? Will FTC get involved? Will DEA? And that's a concern. So if you're making a loan to a company that's selling, CBD products, and all of a sudden they get a stop, cease and desist letter, and they have to stop selling, well, that's a concern to the lender, because how are they going to get repaid? Similarly, for growers, to the extent that, you are growing essentially hot hemp above the 0.3%, that they're going to want to understand what your growing history has been, and maybe potentially look at your past test results to understand, have you consistently been below the threshold, or are there any concerns with respect to that? Another issue for the lender will be, in terms of underwriting, is there any sort of, is there product liability risk? So for instance, if you are making some type of product that's being sold to consumer, is there a chance that the product will cause damages or injuries? And they'll take that assessment into consideration. So, as folks remember, maybe a few months ago, there was the vape crisis that hit across the country. That would raise a concern to any lender if you're making or if you're involved in specific CBD only vape pens, because of the concerns that there might be product liability issues as a result. They'll also look at what the litigation risk could be. So as folks unfortunately know, the hemp industry has been subject to a series of class action lawsuits. Many, I would say, are frivolous, and I'll just leave it at that. But to the extent they believe that what you are doing with your company is potentially going to raise issues, you might get sued, you might be part of a class action, they'll take that into consideration as well. So you'll want to actually explain to them what you are making, what you are producing, what are you selling, but also be proactive and explain to them why there's limited or little risk, with respect to what you are, what you're trying to finance. Similarly, they will want to understand what your insurance coverage package will be. So to a large extent, I know insurance has been difficult to obtain, although since the Farm Bill, 2018 Farm Bill has passed, and since USDA has issued its interim final rules, insurance, at least crop insurance, should be a bit easier to obtain, at least for a farmer. Anytime a lender makes a loan to any type of borrower, to the extent it's a secured loan, they're always going to want to understand how do they get out of this loan if there's a default, a payment default, or any other type of default. And with respect to that, they're going to want to understand what's the liquidation value of the company. So, if you owe $100 and to the bank, but the collateral has a value of $150 at a liquidation value as opposed to a going concern value, that makes it a lot easier to for the banker to make the loan and go through the credit committee. I think on the side of the company, I think what you all want to do is be able to, with data if possible, or with any types of appraisals, explain why your collateral, not just as a going concern, but if the worst happens and you have to sell a liquidation value, why the lender is sufficiently covered. And that's going to really assist the lender in trying to underwrite the loan and help you out. Lenders will look, for the most part, very few unsecured loans in the industry, but lenders will definitely look for a security agreement and collateral with respect to secure the loan. So to the extent there's any real estate that the company may have, they'll most likely look for some type of mortgage on it. To the extent they'll want what's called an all asset lien. And so they will want a lien on all your personal property. They may want a lien on your bank account. They could ask for a pledge of the principal's equity in the company as further collateral, as a further component of the collateral package. And I think one thing people should expect is that they may similarly ask for some type of personal guarantee. Generally, regardless, they will request the principals provide a personal financial statement. And then, because to a certain extent, they'll want to know that if the company is having some difficulties, do the principals have excess cash to plow back into the business as a form of capital contribution? Regardless, with respect to the SBA, and let me kind of circle back there, the loans that Max spoke about at the beginning, or the loan programs that Max spoke about at the beginning, that's in the context of the CARES program. That said, the SBA and SBA lending institutions have the ability to make a loan under the SBA program to hemp, certainly growers and producers and handlers at this point. Under the under those SBA programs, they definitely require a personal guarantee. So it's something to be aware of. I think that, overall, the banking and finance industry is still learning a lot about this industry. They are excited because it's now officially legal. I know this is a bad joke, but I'll use it anyways. In many ways, hemp is the gateway drug or gateway for many lenders to enter into this industry. Obviously, it's easier to lend to hemp, industrial hemp and CBD because of this legality. And certainly, I think, well, knock on wood, but most folks do believe, and certainly in the financial industry, that at some point prohibition will end. And, this will give them a head start into, getting that buy-in from the entire cannabis industry. I think that's pretty much, sort of a very basic overview of what sort of the underwriting process may be and what they'll be looking for. Like I said at the beginning, myself and Frank and Burns Levinson, we have been retained and approached by various regulated financial institutions as well as commercial finance groups to assist them in documenting these types of loans. Now, it's slow. I mean, don't expect there to be billions and billions and billions of dollars available, but to the extent you do have a relationship with a bank or credit union right now, it may maybe not this month or next month, given the crisis that we have, but it's an avenue to start exploring whether they would provide financing for some type of expansion. And finally, there are other types of loans that or lenders that may make sense in this industry to the extent folks will need, high cost equipment, whether in the farming or processing or extraction level. There are funds out there, and there are certain banks that will provide leasing or lending for equipment. Additionally, to the extent that any company has a steady flow of receivables and a set of purchase orders, there are a few groups out there that will lend on that. And so anyways, that's just a little component of lending considerations and what some of the lenders may be looking at. And hopefully this provides you with a little head start in terms of what you need to get together in terms of a package to make it easier for the lender to consider your loan. So with that, I'm going to turn it over to Katrina.
So, Scott?
Yes, sir.
Yeah, no, I just, before I turn it over to Katrina, just looking at some of the questions online, as Scott said, even though this is legal, a lot of banks have not embraced it. And people have been saying, well, I can't get this bank or that bank to agree, whether they're an SBA lender or not. And, the SBA has to do with the stimulus package. I mean, it's covered, but that doesn't mean that a lot of lenders will embrace it and want to get into this game. There still is a lot of confusion in the lending community as well in the business community about what does legal mean. As Sean was talking about, we don't have the FDA regulations, so it's still a gray area. And in the eyes of the FDA, hemp and CBD products are still illegal if they're, food consumption, etc. So to answer those questions directly, you just have to keep looking for the right lender. As Scott said, we're working with a few, but it's a limited universe. And those banks are not really coming out publicly saying, we've got a hemp. It's a case situation. So hopefully it's opening up, but with COVID and everything else surrounding it, as in anything in this environment, whether it's cannabis lending or just commercial lending, it's just going to be more difficult right now. So with that, I do want to turn it over to Katrina Skinner. Katrina recently joined Burns & Levinson. We're excited as a partner in our cannabis group with a focus on hemp CBD and also banking, which will probably be a topic for another time. Katrina was the general counsel and president of Safe Harbor out of Colorado. And I'm going to have Katrina now introduce us to some specific issues regarding KYC and due diligence around this industry.
Happy Friday, everyone. Just wanted to touch on a couple things, segue in from what Scott was saying about the lending part of it. The lending arm for the USDA is the Farm Service Agency. And the Farm Service Agency has issued new guidance on underwriting loans for their partner financial institutions for hemp growers. So super important to take a look at the FSA's website. They have a lot of information. One of the most recent updates is on the end of March, they actually decided to extend the deadline for applying for the 2020 growing season. And they're also loosening some of their underwriting and loan requirement processes right now. So one of the things to be aware of on what they're going to ask for, in addition to some of the information that Scott talked about, is they're going to actually ask for some unique things maybe, is they want a business plan. And so if you don't already have a growing plan or a farm plan that you're working off of, that's something you should expect and anticipate. If you're looking for help on that, certainly Vicente or Burns & Levinson can help you with that, but there is a great template on the Kentucky Department of Agriculture's website. Kentucky has a very robust hemp program, so they do have some guidance out there for farmers who may be interested in doing that. And another one of the unique requests that maybe you haven't seen often when either applying for banking or for a loan is they want to see, for growers, they want to see the contracts of who's going to purchase your crops. And they are actually, the guidance that's out there actually details what they're looking into for contractual provisions. And if they deny it, they're going to tell you why they're denying it, because it's laid out in the statute as well. But that may be something that people aren't expecting or anticipating as well when they apply. The other thing is as Max said and Scott said too, there's going to be a lot of applicants for these programs, either through the FSA through the SBA or their partner financial institutions. So if you go to the SBA's website, they have a list of documents that they want you to submit. Most are very, very typical for know your customer and making sure that they understand who they're actually loaning to. So those would be documents like articles of organization, your EIN number, that sort of thing. But they've got some extras in there, and you want to take a look at it, the list, to make sure that when you submit your application, it is actually complete. Because with the number of applicants that are coming, if you leave 2 or 3 things out that you don't think you want, I'm going to bet dollars to donuts that those applicants who have a complete package are going to float to the top of all the financial institutions and the SBA's new tremendous workload that they're going to be trying to service at this point. For hemp producers as well, or people in the hemp industry, you should anticipate, although like we've all been talking, the requirements for banking or for lending are going to vary from institution to institution until some of the law settles down and there's clear guidance on what those rules are. But you're going to need to produce your license either under the USDA plan or your current state plan, because they're going to verify that you're actually producing as a grower, that you are licensed. And if you're a manufacturer or a processor, if your state requires licensing as well, you should be prepared to have to produce that. And the other thing that you may not expect, but this could depend on the institution that you're working with, the financial institution that you're working with, is that they may also require, if you're selling CBD products and you're a retailer, they may require proof that the product that you've gotten from a manufacturer or processor has actually been tested and has tested below the 0.3% THC level. So there's some additional regulatory hoops that you may have to prove, and they are not trying to harass you. They're not trying to make life more difficult. They're just trying to ensure that what you're selling is complying with state law and is actually an industrial hemp-derived plant or product, so that it's compliant and they can go ahead and assist you. The other thing is there's a lot of other programs under the Division B from the CARES Act. And Andrea Golan, an attorney from Vicente Sederberg, has an amazingly comprehensive summary on their COVID website. And there's a link to it in this PowerPoint presentation. And I saw a question come across, will you get the slides? You absolutely will. So take a look at some of these other resources that are out there, including the FSAs, because they'll give you more information. There's a complete list of all the different lending programs to the manufacturers as well as to the agricultural industries. So, and then of course, if you have any questions or you need any help with putting together any due diligence information, or you have any questions on some of your business plans or what may be the best lending product, feel free to reach out to Vicente or to Burns and Levinson. We'll do what we can do to help you. Frank, I'll go ahead and turn it back over to you.
All right, great, thank you. Going to ask Charlie Alivicetti, who is the chair of Vincente's business law group, to, and I'm not sure if Josh Capel is on with you, Charlie.
No, just me.
Okay, to talk about regulatory developments and other developments throughout the United States in the cannabis industry. It's always great to be updated on a national basis. Charlie, let you take it from here.
Thanks, Frank. So I'm going to keep it pretty short here, so we have some time to take some questions. I'm trying to approach this from a national perspective, which obviously is difficult because these markets with marijuana are so local, and the primary regulators, typically the state government, local governments impact this as well. So, take this with a grain of salt because I'm trying to summarize, what's going on nationally, but obviously what's going on locally is far more important for businesses. So, point 1 of 5, the determination of critical or essential businesses. So most states, and Massachusetts is a key exception here, have sort of picked a designation and stuck with it. The good news is that a large number of states have designated medical and adult use as essential businesses and have permitted them to remain open. There is some nuance here on a state-by-state basis on the distinction between medical and adult use, particularly because most facilities are co-located. So, for example, in California, there's been some sort of, there is a little bit of a gray area about, if you were just a purely standalone adult use facility, how would that be impacted? That we haven't really seen that play out, but you have to pay close attention to your particular state. Here, most aspects, again, speaking generally, we've seen most aspects of the marijuana supply chain not be shut down and deemed essential. The other sort of, important thing to realize here is that this occurs at both the state level and the local level. So an example here would be Denver. Denver came out with guidance that basically said, we're going to allow medical to remain open, but adult use will not allow to be reopened. There was instantly a rush on dispensaries as well as liquor stores, because they shut down liquor stores as part of the same order. And then later that day, they walked that back and allowed adult and medical to remain open. So even though we don't expect for most states there to be any updates to their orders, you could see localities come out and say, we're only going to allow medical to remain open. So, here, pay attention to your localities, sort of, if you have influence there, please help us, in the lobbying efforts. Obviously, we'll talk about social distancing. Don't expose yourself to a heightened risk of a local shutdown by sort of ignoring social distancing guidelines. So, that's an important fact here. 2, we've seen some regulatory updates for social distancing occur. It's one thing to say, we're going to allow you to remain open and sort of if you provide social distancing, but there is some confusion when you get to the specifics of, well, if you're going to allow curbside, how does curbside work? What does social distancing mean in terms of operating a dispensary? Are we going to allow sort of quicker modifications of premises under the current circumstances? Because remember, in the old system, traditionally, it takes a while to sort of modify a licensed premises. So you've seen states issue sort of emergency regulations. So that's something you should pay attention to in the jurisdictions in which you're operating. You've also seen, like here, the second bullet point, curbside and online sales are permitted in some states where they previously were not allowed. Third point here is, at this point, like most of us, the regulators are working remotely at this point, which is going to create some complications for transactions in terms of turning in applications. Fingerprinting requirements we've seen waived. The impact on approval timelines, it's a little early to be able to say definitively what's going to happen. Obviously, our concern is that because of the remote working situation, it's going to be difficult to get regulatory approval on a timely basis in some cases. And while I think the state regulators are fairly well positioned to work remotely, in states where you need local approval to close a transaction, that could pose more of an issue because you're dealing with, they're not necessarily very deeply staffed. So if you have, a local government and there's one person who would be needed to approve something, if they get sick or if they have family issues or if they have technical problems, that can hold up a transaction. So just sort of be on the lookout for that as a potential concern. 4, telemedicine is now an option. A number of states previously required in-person doctor visits to get a medical marijuana card. As part of what's going on right now, you've seen that be waived in a number of states. So Colorado is an example, Massachusetts is another one. So we encourage operators in those jurisdictions that are, particularly in Massachusetts, where there are currently no adult use sales permitted, let your clientele know that they can go online. There's a number of telemedicine providers, and we'll hopefully post something on the website shortly with links. We can provide them to you as well. You can encourage your clientele to go out, get a medical card, and then they can have access to medicine even if they can't purchase on an adult use basis. And then 5, political impact. Obviously, given the current social distancing environment, it's difficult to gather signatures for ballot initiatives. So we've seen a couple of ballot initiatives basically fold at this point. Here we talk about Missouri and Nebraska. So that's unfortunate. And then on the sort of the more traditional side, the legislative side, because everyone's been so focused on COVID, it's been difficult to advance the ball on legalization. So, for example, in New York, you've seen legalization, which was in the first draft of the budget. It was not in the current draft of the budget. It still could be passed on the legislative side, but it's going to be harder to do because everyone's got sort of pressing concerns they want to deal with. And then on that, I would just say that I think the impact of this from a political perspective, in the short term, it's negative because, again, it's going to delay some of these things, and we hoped we could move forward this year. But I think in the long term, I think you'll see that, 2 factors. One is you're talking about marijuana, something that was illegal under state law in a number of these states. Fairly recently has now been considered essential, which is a positive fact for the movement. And the second one is just, we expect the fallout of this crisis to negatively impact budgets. So they're going to be looking for more funding opportunities. So I think in the medium to long term, we'll be able to advance legalization and the movement. But in the short term, there is a little bit of a setback.
Okay. Well, thank you, Charlie, for that update. I'm looking at the questions. I think we pretty much addressed them. If there's more questions, we do have a few minutes. We're running right on time. As you can see, we try to cover a lot. It's kind of like speed dating on these webinars. So hopefully, we're giving you a lot of highlights, and hopefully it gives you some insight into these various topics. And we encourage you to have follow-up with us. We're very accessible. You should be able to get our emails if you don't have them. And feel free to send us questions or inquiries. We will continue to bring you information on what we call hot topics over the next couple of weeks, and continue to do so as long as we have to. And we're forced to communicate in this manner because of the virus. And we will continue to reach out to our clients and people who are listening to these webinars. And next webinar will be in 2 weeks, when we talk about strategic opportunities. Out of some people's misery comes opportunity. We will see a fallout in this industry. We all know that there's capital constraints, and we are already seeing new funds, new capital sitting on the sidelines. Call them vultures, call them opportunistics, but that definitely is happening, and that will create a different kind of wave of opportunity and M&A activity in the space as well. And we'll dive into that in 2 weeks. So unless any of my panelists have anything to say, I want to thank everybody. I want to thank our audience for tuning in, and we want to just say stay safe and hang in there, and we'll all continue to get through this. So thank you for joining us, and have a good weekend. Bye.